Good afternoon. This is Michael with backtothefuturetrading.com. And I had a moment, family's downstairs. We just ate dinner. The wife is getting ready for some ladies that are coming over here. And I wanted to bring everybody's attention to something that's happening in the Emini S&P. Today's date is July 11th, 2017. And there are a number of things that we track that are predictive. So our company focuses predominantly on predictive tools and indicators for futures, forex, and equities traders. And tomorrow is a relatively important day for the Emini S&P, and I want to explain to you why. About 6 months ago, I did some work in terms of developing a predictive tool for futures, forex, equities traders based on sunspot cycles. And if you've done any work at all with predictive tools, or if you've studied the works of W.D. Gann or any of his contemporaries, you'll know that there is a cause-effect relationship in the markets between certain natural phenomenon. Lunar cycles would be a good example, and the reactions in the market. And one of the things that I've been spending a lot of time analyzing is this concept of how markets are affected by the energy cycles, which increase in intensity and decrease or wane over time, but are fairly cyclic. And most traders are completely oblivious to the fact that there is a cause-effect relationship, especially with regards to solar activity. It seems to be this celestial light bulb that affects a great many things, including things like climate. But a lot of people have done a lot of work and research that's readily available online into how the sunspots, which are essentially hot spots of radiation activity, coronal discharges of intense miles high plumes of plasma from the surface of the sun, and that affects our environment. It affects our ionosphere. It charges the outer shell of the earth, and our environment is critical to our psychology. And there are these sort of direct correlations that show what happens at peaks and dips and valleys. So I spent the better part of last year working with my team to pinpoint specifically which exact days were the peaks and lows of those cycles. And what I've discovered is fairly, I think, fairly revolutionary in terms of helping day traders understand when the timing is right for certain positions. Now, I don't want to get into the specifics of where these lines are coming from, but suffice to say that it's a very mechanical process. Once you know when the last solar high was and when the last solar low was. And so when you know those dates, and I've got those plotted on this chart here, you're able to project forward using Fibonacci time extensions. And the turns that occur at these time extensions are fairly reliable in the energy that's produced when we get there. And so I just want to go through here with you really quickly, because tomorrow's an important day in that cycle analysis. The cycles since spring have been fairly consistent. We had a pattern 4 lower low on March 22nd. We had a regular buying pressure signal on April 3rd. We had a pattern 4 lower low selling pressure signal on April 13th. And then we came into a higher tier. You'll see these darker lines are segments where we expect larger moves. That kicked in on April 27th and lasted until June 5th. So these large lines are the ones where we're watching specifically for sort of these larger moves. So if the cycle starts here, we anticipate it ending there. If the cycle starts here, we anticipate it ending there. If the cycle starts here, we anticipate it ending here. Ta-da! Which is tomorrow or today, depending on where you are in the world or what time you're listening to this video. So in between the subdivisions of those cycles, the cycles in the cycles, think of it like smaller waves in between larger waves at the beach. We've had some fairly reliable behavior patterns at those dates. And so this last subdivision, for example, on May 9th, produced a fairly substantial move down, up to and including the next move up on May 23rd, 22nd. And that brought us to the next major cycle high. The intermediate cycle in between June 5th and today, July 12th, pushed us up to the all-time high. And so there was a surge. This sort of surge up into that high was prefaced by this intermediate cycle, based again on the geometries of sunspot energy cycles. The one that carried us down was predicted to be here on June 28th. And that drove us down and broke through the lows. Now, we're coming into another one of these cycles. And I just wanted to analyze it with you here relatively quickly because I've been studying on it. And there's sort of one of two possibilities that can occur here. And I want to preface you for both of them when you're doing your analysis. First and foremost, the levels that are critical to the ES right now, based off of time price doctrine, are 24.10 quarter. There's tremendous support now, 23.89.50 to 23.90 quarter. So that level in particular has confluence of two time price lines. And then we sort of have this area right here between 24.31.50 and up here around 24.32.50. That area again is a confluence point between two lines. The next resistance line is 24.38 half. And then the one above that is 24.51.50. So these four areas are extremely critical, and if you're looking to target very specific entry areas and test places, these are, according to Gann, areas where we expect to see highs or lows form, and so they extend out to the right. So keep that in mind as you're targeting your areas for the ES. But in terms of signals and patterns, I'll put a link in the description. There's a book that I created. Not sure where it is. Let me see if I can find it. That goes through 5 to 7 patterns that I analyze with regards to time cycles, and it's taken me close to a decade to go through it. And stand by 1 second while I find it. Okay, here it is. A Hitchhiker's Guide to the Histograms. And I'll put a link to it in the description here, and it basically goes through what patterns form in relation to time and gives you very specific examples for what to watch. And there are sort of a couple different things that can take place here. Right now, everything seems to be pointing towards a surge in prices. Now, looking at tomorrow's news reports, the banks systemically use econs to scare people and create panic and discord. And tomorrow at 10:30 there's a crude oil inventory report, but that's it. We also have the Beige Book at 2 p.m. on July 12th. Those are really the only two econs. Fed Chair Yellen testifies tomorrow at 10 a.m. as well. So there are sort of these two big two big reports here, and then another testifying session on the 13th, where we also have core PPI, unemployment, and PPI. So I historically look for those kinds of earth-shattering, manipulative reports that the banks will leverage to create panic and discord in the markets as we get closer to one of these sort of super powerful cyclical days. The only time this would indicate an inversion historically is a time where we arrive at a buying pressure time and the market goes in the opposite direction. Let me see if I can spot an example of an inversion for you. Here it is. So we had one of these sort of larger cycles take place on April 20th of 2016. And the April 20th pattern is unique because, as you'll see, the signal appears as the highest high in relation to prior swing highs. In your guide to the histograms, you'll actually see that that's a thing. I think it's on page 19, if I'm not mistaken. Yep, so one of the patterns that I watch for has a very mechanical rule set, and it says if either the buying pressure signal, the one to the left or the right, bar-wise, are higher highs or equal to the prior high, then we expect an inverted move or a push back down. But when we come over here and check out this pattern, I want you to see what would have to take place for that to occur. Okay, so we'll go ahead and scoop this over. The prior swing high, so far as I can determine here, is a pretty jumbled mess. There are two of them in particular. There's sort of one, there's no real clear definition. There's one here at 24.36 quarter, and you sort of have the one here and the one there as obvious. Of course, the all-time high is there. But if you had to look at that and quick eyeball it with as little discretion as possible, the dominant one, of course, is the all-time high. And I would say if I had to eliminate the ones that I'm not too clear about, the sub-high is here. That's the closest high in our book. But we're nowhere near that high right now of 24.3675. So if tomorrow punctures that level in any way, shape, or form, if it closes above it or if the candle wick is above it, it has the possibility of being an incarnation of this pattern. Just want you to be aware of that. But as of right now, it doesn't look like that at all. And we're coming into that green line. And let me come back here. The last several times that we came into a buying energy cycle on the ES, here's what I want you to see. We'll just put some circles there. Or, you know what, maybe better than that. From the low close to the high was an $18, $19 move. From the low close to the high was a $17.50 move. From this close to the high was a $46 move. From this close to the high was a $19.50 move. So if you take the outlier away, you'll see that on average, the banks, when they arrive at these energy points, are pushing the market. Their exertion level is about $18 or $19. Okay, so I don't know where the close is going to be. One of the things that we can use, though, as a forecasting tool is you'll see that most of the closes here are within a few dollars of each other, right? You see how everything is just sort of condensed over there. And if you take and sort of harvest this like a blueberry, bush, if you take these $17 and $18 moves that have been occurring and you bring it over to those closes, you start to see that there's an area over here of interest, meaning we sort of expect it minimally as we come into this close to move back up into 2437 area, but then again up here at 24 sort of 41 42 area. So if they do the bare minimum at that energy cycle, assuming that the close of the market tomorrow is here, we sort of expect them to get back up into that area. If they go crazy and they repeat the outlier gets us up to 2466, 2467 area. So let's take one of those lines here and sort of bring it up. The next resistance line up top would get us to 72.75. So just a heads up coming into tomorrow. Again, I don't have any indication it's a pattern 5. I don't have any indication it's a pattern 7. There's nothing bearish about it or inverted right now. So as of right now, with the information that I have, coming into tomorrow has the potential for buying pressure with, again, support sort of down here at 2410 quarter, 2410 half as the dominant line. If you're looking for a sub-dominant support level on the ES, you want to just kind of add one more tool to your arsenal, you're going to be looking at 2420, 2420 3/4, 2420 half area. I'm not sure how precise I am with drawing the fib on the daily chart. Okay, so we're looking at that coming into that cycle tomorrow, and we'll see. We'll sort of see where we go from there. The other thing I wanted you to keep in mind is that I worked with a really nice gentleman today from Florida. He's an Emini S&P trader, and I shared this technique with him. The Emini S&P on a 15-minute chart is very closely following the time cycles from crude futures, specifically the '08 contract. And today, even with the news and the email reports, you can see. So on the 15-minute chart with the ES, you can see that it's following these crude futures times fairly correlated, moving into the future. And so one of the advantages of our software is it allows you to sort of peer into the future and see what might be transpiring. And I just wanted to bring your attention, these are all Eastern time, New York times tomorrow. So wherever you are, this is Eastern time. Just take a pause for a moment on your screen and just take note. Everywhere you see a little green line like this is indicative of a candle where when the computer gets there, it's going to put a green dot. So every one of these green histograms with a vertical line represents a buying pressure time on a lower time frame. So again, we're coming into that solar cycle date tomorrow, and coincidentally, any one of these times, 1 a.m. tonight, 2 a.m. tonight, 7:15 tomorrow morning, 10:30, 10:45 tomorrow morning, 4 o'clock tomorrow morning. These are all places where on this chart green dots will appear when we get there, or we're expecting buying pressure. And then conversely, everywhere we have a selling pressure time, 3:15, 8:45, 1:15, these are times where we're expecting selling pressure. Okay, so be aware of that as we're coming into tomorrow. We also have the 15-minute times for Thursday. There's another buying pressure time at 6:30 we're expecting. 10 o'clock buying pressure time on Thursday. Selling pressure at 7:45. Selling pressure at 11:30 waiting for us on Thursday, followed by a 3:15 buying pressure time. Also a secondary 11:15 selling pressure time. So a little bit of correlation, or I should say confluence there in terms of time. But for tomorrow, I just want you to keep in mind, these are crude futures histogram times. We're projecting them forward into the future based on institutional behavior patterns. And so if we, in theory, combine the two observations predictively together, we should have some insight as to what times tomorrow to potentially target these bull moves as we come into what has the potential to be an $18 to $19 move up out of this consolidation area that we're in. If you have any questions about this analysis, or you want to know more about how to predict the markets that you trade, please email me, Michael at backtothefuturetrading.com. I'll be happy to give you a link to one of our weekly webinars, or a time where we and I can get together personally and discuss how these processes work and how you can know, how to look for the times in the future where banks are most likely to be bullies and push the market you trade. Have a great night, everyone. Let's see what happens at this predictive line coming into tomorrow, July 12th, 2017.